So, Kelly, what we are looking at right now is equity markets still in a state of flux. Bonds have come back in favor somewhat. Treasuries and corporates have always been a story. It may now be the time, though, to shine for another type of bond, and one might be a little bit less taxing on your portfolio and peace of mind. So joining us now is Patrick Schafer of UBS. He's talking about a new power asset in the market, and we're talking about an old one. It's municipal bonds. He was just involved with two major orders from family offices for millions of dollars. And Patrick, let's talk about why the high net worth, ultra high net worth clients that you service as a private banker and wealth manager are now looking at muni bonds. It's an old asset class, but why are they in vogue again now?
The short answer is muni bonds have sold off considerably relative to other bond asset classes. And we're seeing incredibly attractive tax equivalent yields right now in high tax jurisdictions such as California and New York for high income earners. What that means in dollars and cents is we're seeing yields in the 4.4, 4.3% range. And from a taxable equivalent basis, that's approaching 9%. And with some issuers, we're actually seeing yield in the neighborhood of 4.5 to 4.7%, getting close to 10%
so this
on a tax equivalent basis.
This is crazy, Kelly, because what we're talking about is a bond that in many cases has a triple tax advantage. It's exempt from state and local and federal tax, and it's yielding on an after-tax basis in that 4 to 4.5% range, which means that it would have to be yielding on a taxable basis around 8 to 9 for some people.
Yeah, and in fact, even above 9 for people in the highest marginal tax brackets in California and in New York. And so this is attracting significant flow. Over the last 2 weeks, we've seen record flows, and the year-to-date underperformance of municipal bonds has shrunk by about 20% over just the last 5 trading days. That's because these yields got so attractive relative to treasuries.
Because it's weird, they're disproportionately hit lately every time there's like market disruption. But I mean, again, if you're looking to get in or you're looking to hang on for a while, sometimes you look at the stories, you go, we want to make sure all the financial situations will be okay. Like in Boston, this is a great journal story today where they said, you know, their revenues are down so much from a vacant office buildings that they're having to turn and increase taxes on homeowners who are furious and they're pushing back. And so, you know, are there any areas of the muni bond sort of world where you'd have a little bit more concern about their long-term ability to service the debt or no?
Not right now. I don't think we necessarily see major credit concerns in the muni bond market. There are certainly some policy concerns that have focus around the tax-exempt status of municipal bonds remaining intact. That's been a big story in municipal bonds this year and a big reason for the relative underperformance to treasuries. But for the most part, we think that's a relatively low probability event that has stayed intact since 1913, despite multiple Congresses taking a look at it. There are areas of municipal bonds that may be more at risk, such as private activity bonds. That's obviously gotten a lot of focus because of some potential policy changes there from the administration. But in general, we do not have credit concerns in municipal bonds today.
So let's talk about those high tax areas, places like California, places like New York, New Jersey, Connecticut, Massachusetts, and others. When you are looking at trying to buy bonds on behalf of your clients, if your clients come and say, hey, we need to place X million dollars of an order and we want to be in a tax advantage situation, how do you identify what kinds of bonds? You mentioned private activity, but you know we talk about general obligation bonds. We talk about revenue-based bonds. We talk about certain jurisdictions. Are they local school district level, stadium fixtures, anything like that? What exactly is attractive to you right now?
Longer dated bonds from large issuers that are of very high quality. That's where our focus is right now.
Like what?
Major general obligation bonds, city revenue bonds, things of that nature, out in the 15 and 20-year part of the curve. Last week, we were buying 10-year AA minus California municipal bonds with yields in excess of 10-year treasuries. And so we got over 100% of the treasury curve last year on a 25-year bond that had a 10-year call. That is the exact sort of structure that we're looking to buy in this market.